Hello, everyone. Good evening. Welcome to the December Accelerate Yale webinar, the Y Startup Index, connecting alumni angels to entrepreneurs. We're so thrilled to have you here this evening. Tonight's session is being recorded, and this session will last a full hour. We want to just make sure that you know that you will have time for questions. We're going to leave the last 25 minutes or so for your questions. And if you want to submit questions, I just ask that you put that in the Q&A box at the bottom of the screen. My name is Wendy Maldonado. I'm Yale College class of 1993, and I am one of the members of the Accelerate Yale and Yale Angels leadership team. It is my great pleasure to welcome our panelists this evening. I'm going to allow each of them to introduce themselves, and actually our moderator just arrived, so I'll give him a minute to get logged in. I will introduce him and then he will turn it over to all of our panelists. Our moderator for this evening will be Adam Brenner, who is a partner at DLA Piper, and he is a co-founder of Accelerate Yale and Yale Angels. Adam, are you there? Are you ready to moderate? Or...
I am here. My video has seemed to shut down, which is not convenient right now. Sorry.
Okay. So Adam, while you get situated, I'm going to actually ask each of our panelists to introduce themselves. And then I'm going to go off screen once you get started with moderation. How's that sound?
Great.
Oh, there you are. Okay. So Adam, I'm going to now let each person introduce themselves. Sam, please introduce yourself.
Great. Thanks, Wendy. Sam Hendel, I'm also a co-founder of Accelerate Yale and Yale Angels. My background, I guess my day job has been more in financial services as a portfolio manager and president Easterly Investment Partners, but I also started a company called Data Miner back in 2009. So I'm really kind of the leader in AI and machine learning for event detection and risk alerting for corporates, for media companies, and for the public sector. And I also just completed a SPAC earlier this year, merging with a company called Wejo, which is the leader in connected vehicle data, and also just did a deal in the music space, partnering with KKR to buy Cobalt's music publishing and recordings music IP asset. I will pass it over to Miles. You're up next.
Hello, everyone. I was Sabrick 2001. I helped start the Yale Entrepreneurial Society and the first business plan competition many years ago. Sean and I started that together. We also started Hire One, a fintech company that was based in New Haven that we took public. I've started other companies since then, including SeeClickFix, and have been an angel and a venture capital investor, and very excited to be here tonight. So thank you for including us. Sean.
Great, thanks, Miles. As Miles mentioned, I was at Yale around the same time that he and Sam were there. I helped found the Yale Entrepreneurial Society and Hire One. Then founded a couple other things over the course of time, including a venture capital fund called Acceleprise, now called Forum Ventures. It's a leading investor in early stage enterprise software companies, done a lot of early stage investing. And then 7 years ago, started a healthcare company called Advantia Health that grew over 7 years, and just left the CEO role to go back into what I love doing, which is investing and starting businesses and collaborating with folks like Miles and Sam on new ideas. Excited to be here.
And then we have a special guest, Michael Chime, who's a wonderful founder who I've gotten to know over the past couple of years. And Mike, I'll let you do the honors.
Yeah, thank you, Sam. So my background here will be the shortest just because of length of life. So I was at Yale. I started in 2017, was on track to graduate in 2021. When everyone in my class was doing classes via Zoom or taking time off, I took time off as well. I'm the co-founder and CEO of Prepared. So just a quick on Prepared. Prepared is an app that allows 911 to see through the camera. So if you have an emergency situation, as opposed to just hearing it, now 911 has visuals in seconds. I co-founded that about 2.5, 3 years ago as an undergraduate student at Yale, and then have taken time off, and I'm continuing to work on it full-time now.
Excellent. So Adam, why don't you take it away?
Yeah, no, really excited to be here. So Adam Brenner, partner at DLA Piper in the Emerging Growth and Venture Capital Group. And I think, when Sam and I were talking about the first iteration of Accelerate Yale, there were always a couple pillars to it, right? And one of them was the notion of connecting people, Yale alums for funding, right? Because at the end of the day, we have great friends and people who've had some real success, but why aren't they talking to each other and investing in actual Yale companies when they've gotten to know all that stuff? So I mean, like to talk a little bit to this great group of panelists about how they have all kind of looked at investing and whether they've had nexuses to the Yale ecosystem in investing. So like maybe we can start off with Miles and Sean for a little bit on that.
Yeah, I mean, I can start certainly. I would say out of my angel portfolio, which has probably spanned close to 100 companies at this point, maybe it's not the majority have a Yale connection, but close to it. And certainly some of the most successful deals I've done. I mean, one right now that is, has grown in leaps and bounds that I was in Friends and Family Check was a security scorecard, Alex Jampolsky's company. I first met Alex over beers, I think, I don't know, somewhere, maybe it was a bar or Richter's or something when he was a grad student and I was an undergrad, and he was doing his PhD in transactional security. And then, we stayed friends over the years. He went on to be Chief Informational Security Officer at Gilt Group, worked with Kevin Ryan. And when he called me up saying, hey, I'm going to do a security startup, it was like, I'm going to write you a check instantaneously. And so, that kind of network, knowing that someone well-educated, having known them forever, I mean, those are easy checks to write as an angel. So certainly for me, that's been a part of my portfolio. And Miles, I don't know, feel that's been you've certainly seen a lot of deals there too.
Yeah, and I'll also mention, really grateful that we had some Yale alums who backed us at Hire One when we were just getting started. And for me, a lot of motivation here about completing that circle.
Yeah, that's for sure. I mean, Fred Frank, who was vice chair of Lehman Brothers at the time, I think we wrote him a note just asking to get some advice. And he turned around and was like, well, when you're doing your seed round, of course I'm going to, Mary and I are going to invest. That's not what we're looking for, but that's great. It was super helpful.
Yeah, I mean, maybe I'll just add that, like, Mike, you founded your company with two Yaleys. Miles and Sean, you guys founded Hire One when you were at Yale to get together as Yaleys, and then I founded Data Miner with Ted Bailey and Jeff Kinsey about 6 years after graduation. We all went to school together, and like, there's something special about the the ecosystem that's being built up here. And we think the Y Startup Index is really kind of a way to even further connect alumni who are interested in what really recent grads, and even in Mike's case, sort of in school, creating really incredible companies, and pairing them together. And we can talk a little more about the index, but I think when we started Data Miner, Rick Levin actually invested in Data Miner in the first round. So which I think he was still president at the time, which is kind of cool. But really for us here, we're trying to continue all the great work that the Yale Entrepreneurial Society, Accelerate Yale, Yale Angels, and that's happening on campus with Sci-City. And there are a lot of exciting things on campus, and this we just think is a great way to really pair capital from alumni, connecting them to founders, and we're trying to do it in a pretty egalitarian way. It's really, and we can kind of talk through, but we're really companies that are getting validation from that are getting outside funding. We want to write them a $25,000 check, and we're looking for both obviously more alums to join us in that, in writing those checks, and also looking for a lot of great companies that are coming out of the Yale ecosystem.
I think maybe a step back to get the high level, right? So why Startup Index came out of, I mean, it's an idea I've had for a long time, and then I talked to Miles and Sam about it, like, that's pretty good, we should do it. The core idea was, gosh, I'm really connected into the Yale network. I've tried to keep up with friends, alumni, but I missed so many great deals. Like, I wasn't like Rick Levin, an investor in Samscale. I wish I was. That would have been, up there on my list. I, was friends with Ben and Paul, but I literally, I missed out on Pinterest. Now I've gotten, there are many great deals I've been in with Yaleys, but I started to think about, gosh, what if you just wrote a check to every Yale deal that existed, right? And part of that was, gosh, that index would do pretty well, right? So there would be plenty of companies that don't make it. We all know how hard it is to start a successful business, but you would see the ones like, I often regretted that I didn't just ask Ben when they did a round at $1 billion valuation, be like, hey, could you fit me in? Like, can I get a chunk of this round? But I didn't even know they were doing that fundraise. I didn't know what their metrics looked like at that point. I was just like, oh, great, like it's succeeding. I'm so glad for you because, like I love you guys and you're great entrepreneurs. It sounds like it's going well, but like there was never that moment. And so the idea of the index was, gosh, if we just invested in everything, but created an easy way for there to be information flow from founders to all the alumni that could bring connections, capital, support, it would be good for alumni as investors. It'd be great for founders because with one check, you get the power of the network on your cap table. And so that's the core idea of the startup index. And then, we also thought about it as, gosh, this isn't like Sam, Miles, and Sean trying to set up a fund to make money. This was just like, hey, this is another way to knit the community together. So we've structured it where it's a traditional fund. There's kind of close to no fees. We've kind of kept the fees to minimum, but the carry will actually go back to the Yale community. And the fund is structured where it gets donated. So that was kind of a key thing for us. But the idea is, if someone wants to join the fund as an LP, you're going to get the return of the fund. The carry that would normally go to a fund manager will go back into the Yale ecosystem. And then you're going to get access to these companies and you're going to get all that information. And our hope is literally that we would do every single Yale seed deal, every single one. And so for all the founders out there, we'd want you to keep room on your cap table, make sure you come to us. We also need to build up that group of alumni because the way we've set it up is it's a $25K investment per year. It's like making one angel investment across the whole ecosystem, but we need volume to make the whole thing work. So that's part of it.
And maybe if we can talk to Michael Chime for a second here. So Mike, I mean, I know you've received some investment in your earliest round from some Yale alums. Like, how has that impacted you? Has there been any kind of positives out of that, or how did you find them?
Yeah, those are awesome questions, and I think maybe giving some background on the company and how we got from point A to point B would kind of underscore some of these points that I'll make. Like, so I started working on it as an undergraduate 3 years ago. Didn't know exactly what I was doing, was really young in the process, and I benefited a lot from folks that had seen what the end state looks like, or like what near end state looks like. And a lot of those people naturally were Yale people. So started working on it, got to a relationship with Sam really early on, and just kind of like built that over time. So I started it with the idea, like I grew up in a town where there was an active shooter event in 2012. I was like a 13, 14-year-old kid. And I saw how that intimately impacted this like really small kind of blue collar town that I grew up in, and wanted to see change around that issue. Long story short, I built a software that would help schools in emergency situations without thinking, hey, this is going to be a business. Was just like, how could I build something that would help with that problem that I saw as a kid? And it did well. Hundreds of schools started launching that platform to use in emergency situations. But the natural next question for them was like, how does this information get to 911? And I'd be like, I don't know, just call them. When anybody just call 911, and they're like, no, there's all this data here that could be communicated to 911, but it's just not over voice. Like I couldn't say this, and that's like picture, video, et cetera. And so I started approaching 911 centers saying like, hey, take this data in, and they would be like, kid, I love your enthusiasm for this, but I just can't take that in. Like my systems were built on the assumption that all the calls are landlines and 90% are mobile now. And so like I was introduced to the problem. I say all of that so that like we launched a software in 911. It did well. We launched it maybe 3 months ago. Now 25 cities have signed up on the platform. And from that, right, I'll finally get to, like these guys and why they're super helpful, I think, is like we started to see real interest from people that, invest or funders or VCs. And so we're now in the process of closing a really, really large seed round. And so then when you, and it's due to the market or due to having a great software, but then as a founder, you often ask yourself the question like, geez, like, how do I do allocation here? And so when you think about, this specifically, like this group, I think a question you ask yourself in general in allocation is like, how is this person going to help me? And then secondly, like as a founder, you're always thinking about mission and vision and how can I be impactful? And I think the first thing, and I'll tell a quick story, like I've known Sam specifically for 2-3 years now, and he's never asked anything from me, but always gave me a ton of help. And I think that that's one really cool thing about having that type of people in the community. And one, like it's a great investor, right? You know that they're always looking out for your best interest. And then secondly, as we talked about here, I think from a mission vision perspective, I really align with what these guys are trying to do. I think if you ask anybody in the community right now, they would say we have just as powerful a network as Stanford or Harvard or MIT or any of these people in terms of people that we have in our network, but it's fragmented, right? So like me speaking from an undergrad's perspective, there was founders that were founding companies the same time as me. They were getting funding, and I didn't even know they existed on campus. Or there was people that are out there that were VCs, and I didn't even know they were investing. And so the core mission here of bringing together what already exists, a really powerful network, resonated with us. And so I don't know if that answered your questions at all directly, Adam, but those are a couple of things that we looked at when talking about these guys here.
And I would say that the exciting thing, Mike is a high-class problem that he has a lot of people trying to fund him, and he's basically pushing people away because and we're super thrilled to be putting a very small check in, but like where it gets it galvanizes people in the community to be part of your journey, and we couldn't be more excited to be supporting you and to have your support as well. So. Maybe one thing I do want to discuss, I saw something in the chat on it, just in terms of kind of our connection to Yale. Obviously, we all went to Yale. This is not an official Yale initiative, but we've had a tremendous amount of support from our partners with Accelerate Yale and Yale Angels, which is an official Yale initiative. They're not the same, but like we're really all trying to do the same goal. It's really continue to grow, to continue to build the Yale ecosystem up, making sure that we're having communication with each other from alumni to student, participating in what's happening on campus. And there are a ton of great things happening right now with Sci-City, what's going on, the SOM, law school, med school. We just keep, since we started Accelerate Yale, I guess 6 or 7 years ago, Adam, we've just seen entrepreneurship and innovation thrive on campus and off campus, and we just want to use this to just continue to bind everyone together in a closer way and really elevate Yaleys in the Yale experience.
I think one of the questions I saw in there from David is kind of a lot of the folks will have heard of Blue Ivy Ventures, and there's kind of a question of how is this similar or different. In fact, actually, I think Miles right, isn't one of the folks from Blue Ivy is a member now. Like we've had some conversations with them. The big difference is we're not trying to be a traditional fund that allocates capital and makes decisions about what's a good deal, what's not a good deal, right? We're not pursuing LPs to try and build an asset management business, right? Like the most you can invest as an LP is 25K, the least you can invest is 25K. The most we're going to, at least for now, the way we've set it up to invest in a company is 25K. It's a kind of small, easy check to take. And we're literally, the bar to get funding from us is you have to prove that you went to Yale. So we've got to verify that there's a Yaley as a founder. There has to be, a team working full-time on the venture, and you have to raise 450K and be pursuing a scalable venture, right? So we're not backing like a local restaurant or an art installation or something. Like you're trying to build something that's big and scalable. And that could be biotech, it could be quantum computing, it could be software, it could be crypto, it could be anything. And like, we're not, me and Miles and Sam are sitting here being like, hey, Mike, your idea is great. So it is great. We're excited to be in it because we think it's great. But our experience is that so many of the companies that have been successful Yale founded companies. I mean, I remember talking to Ben about Pinterest. It was an enterprise software company for catalogs. Like they were going to make software to let LL Bean sell better online. And so if I'd invest in the seed round, like that was what I was investing in. Obviously it turned into something really different. So, our belief is like, we just want to be in be in everything. And that's also what'll knit the community together, is that, ideally we're doing 200 deals a year. We have 200 plus LP members, and it's about pulling everyone together, where the kind of the alumni venture funds out there are real funds that are making yes, no decisions. They're allocating capital. Not every Yale company is going to get a check. Like, we'd love to be literally in every company is the goal, and really pull the community together through it.
Yeah, I just add that, like, this includes the grad school faculty. There has to be a full-time person working on something, but like, faculty initiatives, like we really want to be supporting everything. And what Blue Ivy's doing and other kind of alumni, like, funds is great. Like, we want more money in the ecosystem, right? Like that's good for everything.
We hope they write the next check into these companies.
Exactly.
Yeah. And I think that's part of it, is the whole notion that I've heard from you guys on the index fund is, just additional support. And I think some of the interesting thing is, like, there are amazing organizations like Bulldog Ventures, there is Blue Ivy, there is, there are people like Kevin Ryan who've been incredibly active with Yale companies. But I think that part of the idea is that this also gives a place for new people to start investing and looking in Yale companies, and also for Yale alums to receive capital from those people, which is kind of cool. I think, just kind of talking about that, I mean, Sean and Miles, when thinking about the next generation of not just, Yale alumni companies, but Yale alumni VCs, how do you think about that?
I think this certainly can be a starting point for someone, if that's what you're suggesting. We have a number of experienced investors, and we have some well-known founders who are LPs already in the Y Startup Index. But if you're asking, is it an easy on-ramp? Yes, if you're a accredited or qualified investor who wants to start your investing private company, startup investing journey with us, we would welcome that. You can make an investment of $25,000 a year, and that will connect you in with this community of growing community of companies that we're investing in, and you will have the opportunity to learn more about them, and it can be your entree into potentially future follow-on investments if you choose to do that. There's no requirement that you do that, but that's one of the reasons that the folks from Blue Ivy are involved, because they hope to make further investments in these companies that they meet through the index.
Yeah, Miles mentioned, one of the folks who said he's happy for us to share his name. So I've known Noah Glass since we were undergrads together. We're not related. We had to always tell everyone that. But, Noah's journey as a Yale entrepreneur is amazing. He founded Olo when we were undergrads, and it took almost 20 years, and now it's a multi-billion-dollar, public company. I emailed Noah about this. He's like, I'm in right away. And he's like, how can I help? Like, I want to help the next generation of Yales. And that's super powerful, right? Because anyone who's building something, mobile ordering, payments, restaurant space, all of that stuff, like, you would have Noah in a sense on your cap table, and that's the sort of thing that we think is going to be really powerful.
Yeah. Jumping over to back to Sam. Sam, like, how do you think about it as an angel investor, just kind of the Yale community?
Yeah, there are a ton of great companies that are coming out that are coming out of Yale right now. I think, probably 10 years ago, there was no visibility into what was happening, really. There is now a lot more visibility. There are programs that Yale Entrepreneurial Society is doing, that Sci-City is doing. We're having their pitch competitions that are happening now. There's a company called Deep Media that I learned about in a Yale pitch competition, and Adam and I both personally invested in. I think Sean, I think you invested as well, if I remember.
Which one is that again?
In Deep Media.
Yeah, exactly.
Yeah, and like I learned that through a pitch competition. Like, you know, we really just want to build up, you know, the angel community. There's obviously a lot of great stuff happening on campus, and then you know there are a ton of alums out there who have companies, who are starting companies, and we want to be in the front end of it. Like we do have to pair supply and demand. So you know we're hoping to get to invest in every single Yale company that comes our way. We're going to be constrained, obviously, by how much money that, you know, how many investors are coming into the program. But our goal is to, you know, really, you know, and I think one important thing is that the validation, you know, we're looking for really outside validation, which is having over $450,000 invested in the company already. That could be a safe note, it could be in a straight equity round, it could be a convert, whatever. But as long as there's sort of that you know, sort of outside investors, and I would say one thing, like, you know, if your family is investing, that probably doesn't really count. It has to kind of be like an outside investor, you know, outside investors. Totally fine to be angel, doesn't need to be VC. But that's sort of like one of the main criterion is that there has to be outside validation. We're not going to be the first money in, but we're going to be pretty close to it.
Yeah, and there was a question about why that particular threshold. And the way I think about it is we want to be in startup companies in their friends and family seed round, early rounds. So we don't want that threshold to be too high, but we also want it to be material enough to where there has been validation and people have been looking at the company, looking at the management team, thinking seriously and putting real money to work so that the company has a chance of success and there's a hurdle of validation happening. So the idea is that we want to be in sort of every company that's really getting started. We don't want to be investing in every idea that may not start.
Yeah. I think there was also, I saw a note in the chat, I think, just kind of like, hey, are there metrics that you're looking for? And the answer is yeah, right? Like the way we've thought about this is that 450K investment threshold shows that there were at least enough metrics for some investors to find a compelling reason to invest, right? And like, that's enough. And so it's really just, hey, if you've raised 450 and you know, there's a Yale founder, great. Like you've got another 25K waiting for you. And I think one of the other questions is kind of on, you know, safe or convertible note or price round. And it's like, doesn't matter, right? That outside, you've got outside investors that have signed on to the terms that you're doing. And like, we're not trying to make a judgment or make a call there. We just want to be in that deal, right? And, you know, if you think about it from an LP member perspective, so like me and Sam and Miles, we're all invested for that 25K also in the fund. Like we're no different than all the other LP members. We're just putting in a little bit of extra work to make it all happen. It's like a negative financial thing for us, I think, in that regards. But like, you know, if we do 100, like ultimately we'd love to have 100 to 100, 200, 300 LP members. Your owner, if we do 100 deals, like you're putting in $250 into the deal. Like it just like at that point, it's much more valuable to be in the deal and to know what Mike's doing and see, you know, we'll send out, we ask the companies to send us a quarterly update, right? And the idea is we're going to provide some structure of what we'd like to see there, what sort of metrics based on the type of company, because, you know, asking for ARR from a life sciences company is kind of useless, but you know, maybe there's some other milestones, and we'll use the network to say, hey, you know, what are the updates we should ask for a life sciences company or a quantum computing company or something. But once a quarter, that information will flow out to everyone. And then we also want to provide a forum for those founders to connect, right? So that Mike and Rajul, you know, you have very different businesses, but you're fighting the same battle of trying to build a business. And all of you on this call have been founders, know, you know, just being able to reach out to that community if people are going through the same thing as you, particularly if like other Yaleys, like, you know, we've all had so many similar experiences. That's really helpful. So that's, you know, that's the value we hope to be able to provide.
Okay. Yeah, so taking a step back, obviously that's the value that you are bringing to those companies. So can you give a little bit more detail about like where the carry is going?
Yeah, so you know we're really looking. You know, it's effectively We think the way we do it is that we would love to pull it and make it a little bit easier, but kind of every single deal we designate when we make the deal, we designate a charitable recipient. We kind of have probably three real targets for that. So, you know, we do a deal with Mike, we invest $25K. Any carry that's associated with that is going to either Yale Entrepreneurial Society, Accelerate Yale, or Yale Development, that, you know, is hopefully we'll get directed, we think, toward, you know, toward entrepreneurial endeavors on campus, whether that's Ci-City, et cetera. But you know, they're all not for profit, so it's donation of the carry that goes to the not-for-profits on a deal by deal basis. But you know, every cent of carry is going toward continuing to build up the Yale ecosystem. We have a very small administration fee. There's no management fee. You know, we're not getting paid anything. We really just think that's an important thing to be doing, you know, for the community. And hopefully one of these companies hits huge, and we have some real donations going back to Yale. Like that's the home run scenario, is we have that virtuous cycle. So we're just excited to be doing that. And you know, those are the three you know, not-for-profits focused on entrepreneurship at Yale that we've selected.
And that could change over time, but it will always be a C3 that is supporting the Yale ecosystem.
Tara asked a good question, which is essentially, hey, you're three white guys, middle-aged white guys now. How about diversity on the management team? We would love to have other folks helping us with this. I mean, like we said, it's kind of a volunteer gig for the three of us. Because we're not making any investment decisions, we're essentially just now like kind of managing a process, and it's outreach to get people in and then just processing deals. We would love to have other folks join us in that. And we'd love to have that diversity, because we'd love, again, like we want to do every startup, right? So hopefully that also creates equality and opportunity, right? So like, you know, literally every deal, right? So if it is harder for a female founded company generally to raise money, which I think we've all seen the data that's the case, well, it's not going to be with the Y Startup Index. Like you went to Yale, you hit that threshold, you know, okay, we're in, right? Like that's the idea. So if anybody wants to volunteer and step up to support us and help manage it, we'd love that. And I'd love to increase the diversity.
Okay. You know, Wendy, do we want to open it up to some questions? Like if anyone has questions in this group, please do let us know. Yeah, I think just pausing for a second, I think the idea here is just to back and build the network that I think we've all seen has been tremendous over the last couple of years at Yale. And so I think, you know, we have people like Mike, and like the world that he lives in currently at Yale is a completely different one than that which, you know, Miles, Sean, Sam, and I, and Wendy, we were all at Yale. Like for us, you know, the entrepreneurial ecosystem was pretty light, whereas now it's part of every student's life. And maybe Mike, if you could just talk for 2 seconds, just so those alums on the call could just hear, like, what is entrepreneurship like at Yale right now?
Yeah. So, and then I'll end it with a question. Like I have, maybe if I can kick off the questions for you guys, because I think it'd be a super helpful thing to ask for the founders that are on the call. But like, yeah, I wouldn't be able to like cross-section it against what you guys saw, but like, I think that there's been a real push and effort in the 4 years, or well, I was there 3 years, in the 3 years that I was there to focus more on entrepreneurship. And I think it's a multi-variable equation, right? There's a lot of things that go into it. And like it has to be students, right? So like, I don't know if you guys know Brihu or Clark or some of the other guys that like they were working super hard just out of their own goodwill in their free time to bring Yes to where it is today. And I think they did an awesome job. And so I think students play a role in that, and there's a lot of ownership by the students. But I also think like there's only so much a student sitting in my seat can do for the ecosystem, right? Like, so I'm only going to know, for the most part, those people that are there and the people that like Sam that I get introduced to one-offs. And that's why I think this is so, like when I was thinking about, when you're thinking about allocation as someone that's raising funds, I said two things that I thought were super important. I thought Number one was I had known Sam and he was giving more than he was taking. But the second thing was the mission and vision here was just like, let's give back and bring together a community that's already really powerful. Because that's what I believe the Yale community is, right? There's so many people here. It's not a matter of creating value, right, in this community. It's a matter of putting the dots together so that value comes to fruition. And so, yeah, and so I think there's been a big push by students, but efforts like this go beyond the reach of what I think a student could ever do. And it's exciting to see these guys kind of pushing the ball forward on that, because I think 5-10 years down the line, people that were sitting in my shoes would probably have an easier path than maybe we did, which is a great thing.
You know, I would say like one thing, you know, we've found with Accelerate Yale and Yale Angels and now this, like, we want the students to be, you know, we want the students to be involved, you know, help us find the good companies. You know, we are trying to focus obviously on companies with people who have graduated. We certainly don't want to encourage Michael Chime for getting the Teal Fellowship and leaving school, which is an amazing opportunity that you certainly couldn't pass up. But you know, the current students now, and I know there are a couple listening tonight. You guys are all graduating. Like, we want you to be involved in Accelerate Yale and Yale Angels. We want you to be involved in helping us, you know, continue to organize, you know, Y Startup Index. So you know, this is it's just a way to keep going. And we've had incredible interaction with the student groups, both at Sci-City and the team at Yes has just done the webinars that Yes is putting on. We sort of, you know, Accelerate Yale kind of partnered with Yes on some of the webinars and on newsletter. These are all things that are just kind of trying to keep feeding the fire and getting, you know, just more energy and more communication in the ecosystem. And Mike, what was your question? You had a question.
Yeah. So I had a question. So and maybe some founders will share this question. So I think it's very clear for a founder sitting on this call, like, how do I get funded, right? You guys did an awesome job of just like, the line is, if you have this much in funding, we'll fund you. But I think one of the big value adds of something like this is the after investment, right? So the ecosystem that's created and being connected to all of these Yaleys. Like, so for me as a founder, and I'm contemplating like, who am I going to take investment from and who am I going to work with? Like, what things do you think, or so like, what ways are you guys thinking through that kind of connection piece post fundraising? Like, we have, you know, you mentioned the Kevin Ryans or the people that founded really early stage companies, and obviously we could benefit a lot from that. What are kind of the mechanics of that? And like, I know after working with you, Sam, but just maybe some of the founders would love to hear it.
So conceptually in the beginning, we're going to keep it super simple, like a little bit the way Y Combinator's done it, right? Where it's like 3 email lists, one that'll just be founders who've gotten investment, one that'll be just for LP members, right? So they can network, trade deals, communicate, and one that combines the two, right? And you can, you know, what we've kind of constructed too is we kind of created a code of honor, right? So we said, hey, this is a community. We expect people to live up to certain standards. And so just be respectful, keep things in mind, understand there might be conflicts of interest, don't share information, right? Like, without getting permission. And then, you know, we hope to kind of let those, in the beginning, those forums essentially be the way that people can interact, right? And so you could choose to, you know, get a daily digest, get every email, be more or less active with that. But the idea is that, you know, that's kind of how we can connect. And we'll send, you know, we'll take, like from you, Mike, it's like, hey, here's your quarterly update. We'll share that out to the LPs, and obviously they could just reach out directly. Oh, hey, I see your ask, you know, you're trying to get an intro to, you know, the city of Baltimore. And someone's like, oh yeah, you know, my friend is now the CTO of the city of Baltimore, my like undergrad friend. Like, here, let me connect you. Right. So we hope that that's the way those things will happen naturally.
And for those of us who are leaving email behind and jumping into the chat future, the Discord server is up as an opportunity as well, perhaps.
Yeah. I'm curious to see. I've also gotten a bit of the pitch that we should use Slack, not Discord, but as a low rent operation, we didn't want to pay Slack to get a couple hundred people onto our instance of Slack right away. Where Discord's free.
So to wind back a little bit even more from what Michael was asking, there are many founders on this call who actually are just looking for seed funding to begin with from the Yale ecosystem. And all of you are entrepreneurs yourselves. I'm curious if you have any advice for those founders who are here on the call who have not yet gotten to that $450,000 magical mark for the Y Startup Index to invest in. What advice do you have for these founders?
Yeah, maybe I'll say, there is a lot of blocking and tackling in the first money is the hardest, right? Like it's always the hardest to get the first checks. And you should rely on your networks. You should speak to family, and make sure you have honest people around you that will give you feedback, because not every idea deserves to be funded sometimes. Like not every idea is the right fit. Now, the great part is a lot of companies, Miles, Sean and I were talking about this last week, a lot of companies started out as maybe not such a good idea, and then they pivoted to doing something that really worked. I mean, Twitter wasn't Twitter. There was some other crazy idea.
Audio. It was a podcast platform.
It was a podcast. Pinterest, same thing. Something totally different to what it became. You know, find honest people around you to keep giving you feedback. And I think also investor meetings are great feedback. You know, I try to be honest with people and blunt as possible in a nice way and be constructive when I'm looking at a company. And like, I hope that's more valuable than me just saying no or saying yes. Like, I think that there's a blocking and tackling that happens when you're going for that first money, and it's meeting after meeting after meeting. And if someone says no, that's okay. A fast no is way better than a slow no. And ask them, hey, if you think there's anyone else that might be interested, you know, please introduce me in your network. Always make the ask and don't be shy about it. But it takes some time. But like, you know, the good ideas usually, you know, get to that level, and then you obviously want to show metrics to show success. And there's a lot of success that you can show before you have capital. It depends on the business, but there's a lot of success that you can show before you've raised capital, and just keep fighting the fight, because it is hand-to-hand combat, but it's a lot of fun too.
Sean and Miles, do you have any additional advice for those folks who are trying to tap into the Yale network to access angels within our ecosystem?
Well, one, I mean, you know, obviously there's the Yale Angels group as well, right? Which folks on this call are involved with. I mean, I think what Miles, we probably talked to 100+ angels to get our first $500,000 together. I think it was some at least that amount.
Something like that.
Yeah, I mean, so it's just, you got to talk. I mean, right now the fundraising market is amazingly hot, so it's easier to get capital together. But I mean, typically, yeah, it's just a lot of knocking on doors. I would say the most important skill I learned was just asking everyone I met if there were 2 other people that they thought we should talk to. Like, hey, if this is not a fit for you, do you know 2 people who I should talk to who it might be a fit for? And so, like, as long as, you know, you presented well and we're generally, you know, we're kind of showed enthusiasm for what you're doing, like, people always want to be helpful. So they give you 2 more people. And so, like, your network grows exponentially, and eventually you find that person who's like, yeah, I believe in this too. I'll invest. So that was at least my experience.
Yeah, I think the mental frame as a founder of thinking that it's a matching problem, that you're wanting to find the investor that is right for you and your business at your stage, will help you keep going through that, like, numbers and the no's. If you're thinking each meeting as they're going to judge me whether I'm good enough and somehow they have the answer, like, then it's just much harder to keep going. So I think that mental frame that you have about what is the process you're going through can really help you.
It's kind of like dating. At the end of the day, it's a numbers game.
Do you mind if I jump in too? Just as
Yeah, sure, go for it.
You've just done this successfully.
Yeah, I know. So, and it's just recent on my head. So we were just doing it. So maybe there's some helpful advice here too. I think another thing that, like, so we get asked this question all the time too, as we talk to the founders, is like, how do you fundraise, or how do you fundraise in this market, or like some nuanced point of how do you fundraise? And a thing that I always say to founders is, don't rush fundraising. I think, like, right now there's a pull, and I'm saying don't even rush the process to start fundraising, not necessarily the process of once I start fundraising to close, but the process of starting to fundraise. I think there's like, whether it's TechCrunch or Forbes or all these things, there's a lot of push to celebrate the fundraise or just like getting money in. And it's a point of validation for people. And so like people start to think about my milestones as a business are always tied to the money I have in the company. And really that may necessarily be backwards, right? If you build an awesome company and focus on, driving usage or whatever key metric that you're searching on or searching to improve with your business, that's more attractive to investors. So it's a simple mentality shift, I think, for us, is that like it takes time to build something that's worth investing in, right? Like not every company is ultimately going to be something that grows into a $1 billion company, right? And so I think like taking the time to fundraise, I think helps you do two things. One is you go into the meeting with investors with just more substance and you say, hey, these are the things that I'm doing. But also like no one in the early days, right? Y Combinator talks about like product market fit as something that you need to really search for. But like the really core challenges of the business in the early days, figuring out like, what am I going to do? Or like, what ultimately is the problem that I'm solving won't be solved by money. Those challenges ultimately will be solved by you guys. And so you want to think of funding as fuel to a plane that you've somewhat built. And right. And like at no stage is the plane going to be fully built, right, when you're in startup mode, but it's fuel to the plane as opposed to like parts of the plane that you're going to go and put on, right? Like you've built something that can fly. And so I always tell founders, focus on building a really awesome business and see funding as kind of a side point to that, right? It's gas. And then I think you go into these conversations talking just about something that you've built, right? You can just be candid, right? I've done X, Y, and Z, and I can do X, Y, and Z again with more funding. And so that's something I always tell founders too, is focus on the business and funding becomes a lot easier as opposed to focusing on funding as a milestone for the business.
You sound like you've done this 5 times and been out of college for 20 years. So
no, definitely not.
And as I told you, Mike, once you raise the funding, like that's the hard part. Like it's after you raise is the hard part. It's not the raise is hard, but like now, like what are you gonna do with that? And you have to keep hitting, you have to keep hitting your miles. Like it's a momentum game. Like building a company is a momentum game.
Yeah, that's so true. It's just like, everyone's so excited about fundraising. And like, this is not to say that raising funds is not a very hard thing to do, that you should celebrate, post it. But the second that you do raise significant funds, right, like the clock starts, right? And people are expecting you to live up to kind of all those things that you've done. And so I think as a founder, you want to think critically about, right, like, is it the right time for me to set the clock? And so us not raising a bunch in the beginning, right? Like, so you guys talked about it too. I think a lot of really successful startups started as an idea that they're not today. And that was true for us too. Like I was just building things for this active shooter event that I saw in my town. I didn't even know 911 was a problem. And it took 2.5 years to figure out, oh, there's a huge problem here on the other side of this that we should really solve. And so it took that time. Now, if I would have raised significant money in the beginning on the schools thing and just went all in on that, I feel like I would have been on a time crunch and never actually got to the problem that was really big, that people were really excited about. And so like, I always say, I don't think you want to rush fundraising and don't feel the pressure that you need to validate the business by X amount of dollars raised. Validate the business by customer served, by problem solved, or validated by those things. And as a result, you'll see fundraising. It's still hard, but it'll be much easier.
I think that's great advice for our founders to hear. Just one very quick to very specific question from someone in the audience. That 25K that would be coming the way of the founder or the company, is that on top of the 450 that they've already raised, or is it part of a total financing of 450K?
I think it's 450K and then 25K.
Yeah,
that's what I thought.
Okay. Pretty much every company we've seen. I mean, we've now made a couple of commitments, and almost every company has already had more money than that. So the expectation is not that someone's necessarily raising 475 exactly, or so it's usually
all right. Just for the sake of clarity. All right, thanks for clearing that up. We have another attendee who is asking about the types of metrics that you would be looking for. And Sean, earlier you said, if I remember correctly, it kind of depends on the type of company.
Well, no, so no metrics. So for us, for getting the investment from the index, there aren't any metrics we're looking for. It's really just that you've raised 450K and you have a Yale That's it.
And it's a scalable business.
Right, and a
So
scalable,
we're not,
which that seems a little arbitrary, but that's kind of the like, you know it when you see it, right? You've got to be trying to build something that can be, 100 million plus business, right? Ideally, you're aiming for billions.
Okay. All right. Thank you. So we have another question that's been there a little bit for a while. Follow on to his earlier question about building the Y Startup Index. Do you want to talk at all a little bit more about how you're doing the outreach to bring in more LPs, who you're looking for? I think the burning question here for the folks who do want to get involved is, how can they get involved in the Y Startup Index if they're interested?
Well, I guess we had a quick question from Adam as our attorney of whether we could put the link.
No.
Sign up. So the answer is no. So the answer is, if you reach out to us, we can give you directly the information on how to become an LP member. We're doing direct outreach. We're obviously, did this today to try and get the word out. We'd love all of your help, right? So if it's something you want to get involved with, we can obviously get you those details to get involved. But then, each of you went to, you have classmates that have been successful. Maybe they do some angel investing. Maybe they're interested in it. Maybe they're venture capital. Maybe they're founders, successful founders. We just love to have everybody involved. So helping to spread the word. So we've done a lot of, it started with, my network, Miles' network, Sam's network, Adam's network. And then we're, our goal is to then have those networks perpetuate, right? So they're folks that no one knows that I don't know, who are Yaleys who've been really successful. I'm sure Mike knows folks, right? So some of his investors and other folks. So that's it's kind of been organic, and same thing on the deal side, right? So we've gotten our initial deals through deals that we've seen, but again, we're trying to solve for this problem of we haven't gotten in every deal, we haven't seen every deal, and so we really need the network to work that way, right? So everybody here, a company that's raised 500K as a Yale founder that's trying to build a big business, I think you can just send it to investments@ystartupindex.com. Just send us the contact info, like even the sentence or two, and we can reach out and get it into the process. I mean, we really want it to be very seamless.
Yeah, and we're doing this as a quarterly rolling fund and angel list. So it's on angel list. It's all straight through processing. They do all the kind of the accounting and finance part of it. And whatever money that we have in a quarter, we want to deploy that, 25K a piece into the companies. Like the goal is to deploy every dollar that we get, company by company.
Okay. A couple more questions as we wind down here. We have about 5 minutes left. Do you have any ideas on how to use the Y Startup Index to help people find lead investors?
I thought that was a great question on there. Just brains, I think that's the sort of thing where the community can start to provide answers, right? So I don't know, maybe we even have something where it's like,
well, I think that's for the next round, right, Sean?
Oh, for the next round, for sure. That's
right. That's certainly a value add that we're hoping to help with, is that you're getting visibility with these LPs who are involved with other investment platforms, know other investors, perhaps can write checks themselves. And so we don't have the answer right now. What Sean was saying, like to get that first round done, Y Startup Index hasn't solved for that problem yet. If people have ideas, we're open to it. But what we were hoping to help with is your next round you're getting visibility into.
Yeah. That's a lot of motivation for, I think, VCs who join as LPs. It's like everybody wants to see deal flow.
Yeah, and it's the same community building spirit that we're doing. Accelerate Yale Angels. It's all, it's all sort of part of the same, same community and same goals. And I think that's shared also by the student groups as well. I think as a community, we're all in this together in terms of wanting to keep strengthening the binds between alumni and student, what's happening on campus with the administration, and there's a ton of momentum really at the Yale administration level. There's a lot of momentum to help organize even more the things that are happening kind of in the various areas. So stuff going on in grad school, stuff going on in undergrad. And obviously, you know, we're putting, you know, we're putting money to work and putting, you know, our relationships to work as a community of alumni.
And just to kind of dovetail on what Sam is just saying, I want to be really clear. We said this earlier, but I want to just underscore it. The Y Index Fund is not affiliated with the university. And it is also separate from Accelerate Yale and Yale Angels. So it is its own standalone entity, separate from the university. It has no formal affiliation or informal affiliation, except that we're all sitting here as young Yale alumni, right?
Well,
And
hopefully
ditto
the
for
only
Accelerate Yale.
affiliation, well, not hopefully the only
That again,
affiliation.
John?
The affiliation will be that we're donating the carry or portion of the carry to Yale. So
Yeah.
Right.
they're very happy to have that affiliation always.
Okay.
Have the
They're always,
economics
yes,
down there.
the university is always happy to have that.
Yeah,
Excellent.
no, and like, but like, that's the cool thing. Like, you talk about it as donating the carry, but what that means is that the upside on these companies, the exit, goes back to these organizations that are affiliated with Yale. So that's kind of cool.
Yeah, so in a sense, you know, as an LP, you get the return, you get access to the deals, and you know that the fund you invested in, you know, that rather than that going to the set of managers, it's going back into the community.
So,
All right, 2 quick questions, and then we're just gonna close out here. One question: will founders be able to see who the LPs are?
I don't know if that's something we've been toying around with. I think we'd kind of have to get everyone's permission. Our guess is
yeah,
that probably most of the LPs. I mean, I don't, you know, as an LP, like I'd certainly be fine with folks knowing that I'm involved, but we would want to get everyone's permission first. Certainly your communication would get to everyone, and anyone who could help you could reach back out to you at a minimum.
Okay.
And in the same way, it may not be public every company that we're in.
Right.
Like even this first investment that I mentioned, where I'm really excited, you know, the first investment, the first check that we wrote was to a female diverse CEO. I'm not confident that that's a public round yet and a public deal, so I'm not going to say the name of it. And I think we'll see those situations on both sides for founders and LPs. Although we do want to build the community, so we'll encourage everyone to, you know, be as public as they can.
All right, thank you. Last question. There are some founders who aren't looking to raise 450K or more, and but they're still looking for some funding. Is the Y Startup Index open to those types of cases?
I think it would probably have to be the next round, like once we kind of cross that threshold, because listen, if a company can scale incredibly well without that, then more power to them. Like that's fantastic. But I think for us, we probably, you know, need to stick to that rule. Just you know, having 450K in outside funding go into a company, and then we'll put in 25.
and Sam, just to confirm, is it 450K? And someone just asked this question: is it 450K in the round, or is it 450K raised to date?
I think it's raised to date, guys. If I'm correct.
That was the way we set the threshold.
Yeah, it's raised to date.
You've raised 450K since you got started.
Okay. All right. Thanks for that clarification. All right, you guys, it's 9 o'clock. Let's wind it down. I want to thank all of our panelists tonight: Sam Hendel, Sean Glass, Miles Lasater, Michael Chime, Adam Brenner. Thank you for moderating. I want to thank all of the attendees on tonight's event, and thank you so much for being so engaged in the chat and the Q&A. It's great to see all of you connecting, and please connect on LinkedIn and connect back to us here on this event. I want to thank the Yale Alumni Association Shared Interest Groups, without whom this Zoom event would not be possible. And this recording will be posted on our YouTube channel. Please subscribe to our YouTube channel and follow us on LinkedIn. You can join our Facebook group. We are planning events for after the new year. This will probably be our last event for the calendar year, but we have lots of great stuff in store for you in 2022, including at least one more pitch competition, if not more. So with that, Have a great night, everybody. Have a happy and safe holiday season and a healthy holiday season. And we will see you again in 2022. Thank you so much. Have a great night.
Thank you, Wendy. Thank you, everyone.
Thanks, everyone.
Thanks.
Thanks, everybody.
Bye.